All right, so welcome to another video. Today what we're going to do is we're going to go ahead and take a look at some profit-taking concepts when it comes to selling vertical puts. So we're talking about selling, not buying verticals. So we're talking about selling. Now, if you don't know what a vertical is, I highly encourage you to go ahead and check out the other videos we have on our YouTube channel, or check out the website at tradersfly.com. There's a lot of courses, video material that you could just really get into if you want to learn a bit more about vertical spreads. Anyways, let's kick things off and get things going. And we'll take a look at a vertical spread here. So this is what a vertical spread is. All it is buy one, sell one, or in this case, buy two, sell two. So we went ahead, and if we look at the 85, we bought the 85s and we sold the 90s, okay? So this was on target. So if we look on target right here, the stock price recently hasn't been doing so well. So when we look at this, it's been pulling back. And then what we've got is, even if we did it around the 140, we could sell something way lower price. And then now that stock is still kind of just hanging out, right? So it's nice to sell these verticals when their stock is going down, and then you get more range and you've got some room to go. So idea number one on profit taking. Let's get to the meat of the show, right? Idea number one and concept would be to go ahead and look at how much money you made. So if you made most of your money already, then that's a good time to take your profit. So in this case, the most I can make is, let's just go ahead and move our mouse over here, is 40 bucks. You can see it over here on the lower left. It's 40 bucks. The other way to do that is just take the 106 or 126 minus the 106. That's 20 bucks. But I got two of them, so it's 40 bucks. So the most I can make is 40 bucks. I'm already up 38 bucks. So that's kind of idea number one. That's when you would go ahead and take some profits. I made most of my money, so why would I stay in the trade? Idea and concept number two of when you take profits is there's still a lot of time left in the trade. So if we look at this trade, okay, and we break it down, this current date is 6/23. Okay, you can also see it here at the top, June 23. But this expires July. So I actually still have July 21st. Let's go look. How many days to go? I still got 28 days to go. And if you've got a lot of time left in the trade, there's no need for me to stay in the trade 28 more days to try and get two more bucks. Trying to make two more bucks, it's not usually worth it. So that's another point and concept. Okay, let's look at number three. So idea number three is the market or stock is high or it looks weak. So if we've got, let's say, things rolling over and this thing just continued to roll over, that would be a place to do it. Or if it was kind of, hey, at this upper end range and then just started to roll over, that could be a place. Or we just moved up a lot and, you know, probably then you profit take. It's like, it's a little bit high, so I might want to take some profits. So again, that's another point. Market looks high, or it's starting to look weak. It's like, oh no, like let's say you were in the trade, you got in the trade somewhere over here and you're holding, and all of a sudden it starts moving like this. You're like, I better get out. So that's another point. You could get out early in that case. All right, so now we've got is idea number four is you are overexposed or have too much risk. So when you have something like this, basically what's happening is that you've got too much capital. So if let's say you've got, you know, a bunch of vertical spreads here and another vertical spread here and another vertical spread in another section, then you might have too much capital on the line. Now, if you've just dabbling with a few contracts here and there, it might not be a lot of capital for you, or it might be a lot of capital for you. But let's say you've got a ton of vertical spreads. And if you look at this account, like I've got a ton of positions here. And if you see all that risk that you have, it's like, well, maybe you've got too much on. And if you've got too much on, that might mean you might want to pare it down and take some profits, even if it's not a lot. So if let's say you have 20 positions, but you normally trade 10 and you got more positions, or you normally trade, let's say $5,000, but now you're trading $10,000. So if you got too much risk on, more than normal or more than what you're comfortable with, that could be another reason to take some profit. So anyways, I hope that helps, gives you another insight to looking at some of these trades of when you might want to take profits. Feel free to check out our website, grab some freebies, do some downloads, book a 20-minute session, and I will see you in the next video and episode. Take care.